While Bitcoin ETFs are interesting, there's something else that should be much more interesting for all of you that doesn't get much attention. Okay? For that, we use tokenization. BlackRock's plan to turn everything into a coin. You might think that ETFs are big, but tokenization is going to be even bigger. Luckily, we have the chance to really dive into this topic today and talk about how it's going to be a huge deal for the crypto industry in the future. I'm not sure how I feel about all assets being turned into tokens because I love decentralization. I think by the end of this movie, you'll have a very good idea of how tokenizing all real-world assets and decentralization can work together in a way that is so good for the XRPL that it will become a multi-trillion-dollar business. I mean, doesn't want the XRPL to be worth a lot of money. If you really want that, then you should watch today's show. Let's get started, so please click the like button so everyone can see this. Smart contracts are cool to us. So I'd like to explore the world of tokenization. There was an interview with Larry Fink in which he hinted that he wasn't just interested in ETFs, but also in a concept called tokenization not long after that. In the interview, the BlackRock Buildle Fund was launched, which now has over $500 million in assets under management and is based on tokenized treasuries on Ethereum. Talk to us about what the BlackRock digital asset team wants to achieve with tokenization. Yes, tokenization makes us very happy. As you said, Larry, a lot of people in the company are also excited about tokenization. This could have the power to completely change the way banking infrastructure works, right? But it works even better with some of the DeFi apps you can make using tokenized assets. We should keep in mind that we are still very early in the process of tokenization, right? And I think there are three big things that need to happen before this really starts to pick up speed in terms of acceptance. And that's one, a wide range of institutional grade wallet providers that can handle both crypto and tokenized assets. Two would be large, trustworthy markets for trading tokenized assets. This way, the liquidity value proposition that is mostly theoretical about tokenization today can become real. And the third is clear rules and regulations. That's in large part because people know that if I tokenize a bond, it's still a bond. It's still a stock or an ETF if I tokenize it, etc. We're going to keep going on this path. If that idea comes true, it's still very early, but if it does, we could have a much more efficient, accessible, low-cost, and flexible financial system than what we have now with traditional rails. That's what I think gets everyone excited. Robbie, you guys have something like a plan or strategy for what gets tokenized first. As you might expect, in the crypto world, these real-world things are called assets to differentiate them from our made-up internet money, which are crypto-bearer instruments like Bitcoin or Ether. So let's talk about tokenization in terms of things that exist in the real world. For example, what types of assets happen first? I think the original object that was tokenized is probably money. Tokenization can be seen in the steady coin. David also brought up the BUIDL fund. Some people are trying to tokenize the treasury. Then bonds might come next. But what does BlackRock think about this in terms of the types of assets they hold? Are there types of assets that work better for this? What do they look for? What do you all think will happen? Yeah, well, it's clear that after tokenizing cash, i.e. stable coins, a lot of attention has been paid to tokenizing different kinds of stable value yield tools. And there has been coming together around that use case. That's true for many good reasons. I don't think there's as much agreement today about the second, third, fourth, and fifth most targeted and biggest value add asset classes once you get past that. The two main things we think about when we think about tokenization and what it might mean for our clients are, of course, access and cost, right? What are some types of assets that many buyers find hard to get into these days? What are some types of assets that are currently very inefficient and expensive to run that can be made more efficient by tokenization? That's interesting. It's interesting to look at both access and cost. Also, I want to ask the question because a lot of people in standard finance didn't believe in Bitcoin and Ether as assets 5 years ago. People who are skeptical about tokenization in TradFi are also present. Oh, of course, people who don't listen to Bankless would say something like, well, Robbie, we already have tokenization, but people who do listen to Bankless would not. You have turned BlackRock items into tokens. ETFs are the name for them. That's the Ethereum of money, it's an ETF. As well, we already have bonds, stocks, and capital markets shown. What do you say about how tokenization will help people? You said earlier that it was kind of like DeFi, and you'll make it possible to write smart contracts with if, and then statements that tell you what to do with certain tokens. But then you talked about cost and availability. That being said, what would you say to someone who doesn't believe in tokenization and says that our current financial system works just fine? For example, have they seen securities? What do you tell people who say the markets are doing well? To begin, I would say that this point of view is not very common in traditional banking. If you think about when crypto and blockchain first became popular with a lot of people, it was in 2017. And blockchain, not Bitcoin, was a big word in 2017. Well, there are some problems with that for a number of reasons, but those problems aside, that trade, so to speak, has been wrong since then. While Bitcoin and other cryptocurrencies have continued to rise, many of the early blockchain apps, networks, and consortiums that were created, most of which were private, have not done as well. That feeling does not go away, though, and it often shows up in the form of tokenization instead of crypto. I also think that is wrong. That being said, the use of crypto is likely to be a key part of tokenization. After all, what's more dangerous? Is it riskier for big financial institutions to put 1, 2, or 3% of their money into this new asset class, which has a high potential gain but a high potential downside? Or is it riskier to move what could be tens of trillions of dollars worth of existing assets to this new technology paradigm? Now that you think about it the second, option is clearly much more dangerous. Because of this, one way that our industry is likely to lower the risk is to build solutions, comfort, and acceptance around crypto that get companies used to using blockchain rails. This will ultimately help the adoption of tokenization. Also, this is a great point. It's been a long time since I've heard from anyone. It needs to be so smooth and simple for everyone to use, whether they're in a store or an institution. It should be like any other technology. It should be a no-brainer, such as when the car was first made. There's no question. Do you want to feed a horse hay, clean up its poop, and take it to the vet? Or would you rather buy a car, park it in your shed, and only use it when you need to? Having a car is much better. When cars first came out, though, there were a lot of people who didn't believe in them or thought they were bad. Because of these things, horses are better. Nowadays, though, it's clear to everyone that a car is so much better. There were businesses, though, like ones that made cars, and many of them failed, which is why things were better. Every car company didn't quite make it. And in fact, only Ford is still around today out of all of them that were around in the early 1900s. But Ford didn't give up. It made a better product than all of its competitors, and people bought it because of that. They still buy it today. That's why we have Ford, one of the biggest car companies in the world. I still think the company is doing well. I don't see how crypto is any different. That's what I want to make very clear. When that great crypto project comes out and builds an environment that people want and use, I think that institutions will seize the chance to use it. And before you know it, all real-world goods will be turned into tokens. To be honest, I don't think that many of these companies that don't really understand cryptocurrency will be the ones to make this happen. Now, you can call me crazy. Sorry to say that, but that's what I really think. Hey guys, keep that in mind. I just want to quickly say that now is a great time to trade cryptocurrency. We can see that Ethereum, Bitcoin, and XRP, among other assets, are all in the overbought zone right now. On the daily chart, the stochastic RSI just crossed to the upside, which means a big drop is very possible. When you join Marchix through my link, if you trade short through that link, I will get paid. You will be automatically put into my amazing trading competition. If you win, you'll get this huge prize pool right here on the screen, just for trading, and it will be paid to you in XRP. That's good news for everyone. You trade, and that's how you make money. You also get bonuses for using my link, and you get a $100 bonus for trading, making a deposit, and using my link. This is a win-win situation for everyone involved. But yeah, I think now is a great time to be active in cryptocurrency, no matter how you feel about the price. On both sides, there are chances. That's something I don't want you to miss. Also, I do believe that tokenizing all real-world goods will be very big. Let's get the love out there. Spread the word about this new multi-trillion-dollar business. Ladies and gentlemen, please click the like and subscribe button and choose March as the month you want to start. I'll see you soon. Goodbye.